Hi everyone, welcome to Reimagine 2020. I'm one of your hosts, Artur, and today I have with me Clayton from UMA, or Universal Market Access, I guess, relatively under the radar, but at the same time, definitely in a lot of people's radars, project focused on the kind of cross between of oracles and synthetic assets. So super interested to learn more about this protocol. Welcome, Clayton.
Hey, Artur, thanks for having me on. Yeah, excited to be here and to share more about UMA.
So why don't we just get started? How would you describe UMA, and what's the vision and where are you guys at with it today?
Sure. So UMA is kind of two things at once, but people mostly are familiar with UMA as a synthetic assets platform and protocol. But at the same time, there's also this unique property, which is the priceless oracle. And what that allows us to do is to run these synthetic assets with collateralized positions without actually needing on-chain prices. The only time a price needs to come on-chain is if there's ever a dispute. So if somebody tries to withdraw too much collateral, somebody can liquidate that position, and then if that was a bad liquidation, somebody could dispute it. Only at that point would the UMA token holders have to kind of go back and look at what the prices were and then put a price on chain. So it's really these two pieces. It's the financial contracts that support the synthetic assets, and then it's the priceless oracle. So that's kind of like just a very, very basic overview, right? What's cool about the synthetic assets is like they're actually just one type of direction UMA could go. And so I think as an organization, like the team just sort of decided that synthetic assets would be almost like the proof of concept for this priceless oracle. But these financial contracts are actually even more flexible than that. And so they could be used to build other products even than synthetic assets in the future, as well as just the priceless oracle, which doesn't require these on-chain prices. Could be used by a number of other crypto projects and DeFi projects in the future, somewhat depending on their design. It's not the perfect solution for everybody. Some projects really need that continuous price feed, but there's other projects where it really isn't going to be an issue, where it would only be if there's a dispute. And that, I think given the gas fees we've seen lately, that's kind of a nice benefit, right?
Yeah, for sure. And I think that's interesting because in UMA's case, it's like you said, it's two different things combined, but as a user in this case, you don't necessarily have to use both, right?
Right. Yeah. And so yeah, there's a few different ways you could come to UMA kind of as a user. One is just if you're interested in using the synthetic assets, and so maybe they're already being traded on chain. So like there was right now, all of our synthetic assets are expiring. So some of them are live for a period, and then they may or may not be renewed. So like previously, we had synthetic comp token, for example. So a user could just interact with that on Uniswap and not worry at all about how we resolve prices, for example. But you could also sponsor and mint this synthetic comp if you wanted to short it. So that would be, and then you would sell it in order to short it. But then there's also just like developers or BD kind of relationships you could have with the protocol where you're actually building on these contracts and customizing them to suit what you're after. So yeah, there's a lot of different angles that you could go with that.
And
yeah,
I'd like, where are you guys at today, essentially, with this sort of with the vision and the building blocks?
Sure. So UMA has been on mainnet for like about 6 months. So it's actually pretty young in that regard. There's been a lot of research that went into it beforehand. It's very quite well thought out. And so like right now, I think the first 3 months were really about like testing that the contracts worked, testing that the DVM, which is the data verification mechanism, which is that priceless oracle, testing that it worked. So for instance, I ran basically like a fake liquidation or like a fake dispute to then put this up to a vote just to make sure that like people can submit the price and they'll agree on a price and the price is actually what we would expect it to be, et cetera. So there was like that testing period. The next period after that, which has started with liquidity mining, was like will it hold water? So like I think we had about $20 million at one point worth of WETH in there, or West maybe. Everyone seems to pronounce it differently, but so we had like $20 million in there, right? So that's sort of like an implicit bug bounty, right? And you know, nobody was, there was no issues. There have been a handful of liquidations, and there was one dispute, which was resolved fine. So yeah, it's been really cool in that regard. Just a lot of kind of testing these things out. Now the products themselves, the product that, for instance, had the $20 million of WETH in it, that's called a yield dollar. And the way that design works is you're able to mint synthetic dollars by locking up your ETH. It's quite similar to MakerDAO. So in the sense that you lock up your ETH, and then you can mint these dollar coins, except they aren't really intended to trade at a dollar. They're actually, in a normal market without liquidity mining, they would trade for a little bit under $1. And then as the expiry date approaches, they would converge to $1. And so what that effectively means is it's like a funding rate for leveraging long. If you were to mint these yield dollars, buy more ETH, you could do that a few times, leverage up. The difference between the trading price and $1 would be the effective funding rate. So that's a financial product that allows for fixed rate lending and borrowing, which is useful. It also is different from like Compound or the other lending sites because it doesn't use algorithmic pricing based on utilization rate. It's just like a live market rate. So it's just whatever the market's paying for these yield dollars, you know, whatever people who have dollars are willing to, that's the other side of that trade, sorry. If you have stable coins and you wanted to buy these yield dollars at a discount and hold them, you're earning that yield. So that market rate is just determined organically. However, right now, we're doing liquidity mining on top of those yield dollars. So what that means is you can provide these yield dollars on Balancer with USDC, and you will receive UMA tokens each week. And what that has caused is actually the price of the yield dollar trades over $1 right now. And what that effectively means is you can actually be paid to leverage long on ETH, sometimes like north of 100%, like APR, meaning.
Wow.
So if you're long ETH, so that would be the MakerDAO equivalent of a negative stability fee. So you're literally just getting paid to leverage long. So those are kind of the products that we have out at the moment.
Nice. And I guess you mentioned that you've also had one dispute that has happened and settled. Because I mean, I've full disclosure, I've also I have spent a little bit of time, definitely not enough time in the UMA community, and it's definitely you have like a sense of, you know, everyone is, you know, kind of like a lot of work is being put into sort of like, you know, how exactly that, you know, everyone is like super motivated, and there's just so much sort of like effort being put into like, you know, figuring these sort of like processes out, and what, like you said, like, you know, what are the best ways to you know, to construct these proposals and how to vote on them and so on. It's a very cool vibe.
That's cool.
And but I guess and I also know that the kind of the grand goal or vision of UMA, what it stands for, is universal market access, right? And I guess I understand the goal is to also bring sort of like non-crypto financial assets to the sort of to the crypto markets, or simply just via UMA. Where are you guys at with sort of, is this the vision that is still sort of that you're like progressing on, or?
I think so, yeah. You know, the ability to add like kind of like high profile US stocks, for example, is like a bit complicated, and it's unrealistic that we would expect that UMA governance, like token holders, would probably approve that right now, just because the protocol's, you know, like just sort of young, and like it's over time. Once we've distributed all these community tokens, for example, we're distributing 35 million tokens over the next several years, or kind of indefinitely. Like as that sort of gets a little bit more spread out, and it becomes a protocol with a distributed governance more, then I think we could start to see that happen more. As far as it goes though, like, so for example, we just announced a collaboration with Perlin, and they're based in Singapore or Australia, I think half and half, maybe even. And they're going to be working on some commodities. So what they did is they first got their token approved as a collateral type with UMA, and they are going to be working on I think oil, and they talked about carbon credits. So there's a certain amount of going in the direction of commodities that they're working on. So yeah, I actually don't think it's that far away to start to see like non-crypto assets trading with UMA. Just kind of depends on the category and, you know, who's going to be paying attention, I think, to some degree. Yeah.
And I guess like collaboration is definitely the sort of the key, or the, you know, the way to success in DeFi, especially. And I think another project that you guys have been collaborating with is Ren via Ren BTC, right? How did that work?
Sure. Yeah, thanks for bringing that up, actually, because after I explained about the yield dollar, I was kicking myself for not mentioning that as well. So Ren and UMA work together to create this yield dollar that's based on Ren BTC. And that works exactly the same as the ETH-backed yield dollar, to where you can mint these yield dollars, which are called UUSD tokens. And what that effectively did was offered a way for people to permissionlessly lever Bitcoin, which doesn't exist currently or didn't exist before then. So you can purchase this Ren BTC or even mint it permissionlessly. You can start with native Bitcoin and end up with Ren BTC, and then lever long through UMA's protocol and end up, you know, with completely permissionlessly. You don't have to go on any of these centralized trading platforms. So that was a new thing, right? And we're also, Ren and UMA are both offering liquidity mining rewards on that particular pool. So if you mint these yield dollars and you provide them as liquidity, you earn these rewards. Subsequently, that yield dollar is trading for a premium, and you can also be paid to lever long on Bitcoin, just as you could with Ethereum. Yeah, and it's been great working with the Ren team. No, yeah. You know, if you're bullish on these things, and we know from the size of the market that there are people who do that, I think ultimately, I think there's kind of a good play for anyone who like has a CDP or is using FTX and watching this. Like, I don't think that our market is, I just don't think like enough people know about it yet. So I think there's actually kind of a fat benefit right now to, if you're levering somewhere else and you move over to UMA, you're going to suddenly be being paid for the privilege of increased exposure. So yeah, I think it is a good deal.
I think you're spot on, actually, with what you say, that not enough people know about it. So someone said as well recently that that this, it might seem to, you know, to you or to us that this, like, for example, 100% APY is completely unrealistic, and how is this possible? But it's actually, it is in a form, it's information asymmetry, that, like, you know, that we are actually so deep in this, down this like rabbit hole, that really, like, just it's not actually, like, almost no one knows about this, like, relatively.
Sure.
But speaking of
yeah,
what I've
absolutely.
also you guys have definitely, you know, you've come a long way, and obviously a lot more to go. What have the biggest sort of like hurdles been so far?
So the priceless Oracle design creates some very interesting hurdles, mostly from a UI perspective. People show up and they don't necessarily understand, for example, in order to mint token synthetics, you have to actually meet the global collateralization ratio. So what that means is you end up having to over collateralize quite a lot more than you might like. And then only after you mint that position, you can withdraw back down towards the required level. So that creates like an interesting, you know, kind of UI experience. And then there's also like, we need to maintain a certain minimum position size. And the reason that that's true is because the way that the system is maintained is we have bots that are economically incentivized to like basically go after you if you try to withdraw too much. The only reason a bot would be incentivized is if your position is big enough, right? If you have $2 on there, the bot's not going to pay gas fees to liquidate you, right? So anyway, I won't go into too many more weeds on this overall detail, which is just that yeah, the priceless design means that there's a bit of learning that people need to do to use the system. What other obstacles would I say? I mean,
sorry, do you mind if I just jump in? Who is the
please.
I guess the intended sort of like the end user of UMA? Who would be the one like sort of like minting these assets? Is it like, as you mentioned that there's like a UI issue, and as some like, you know, kind of that there's a lot of work to be done around like educating the customer? Is it actually a retail focused product, or is it more like a is the vision more it's like an institutional, or some that's sort of like cross between which we I think mostly have in the DeFi space, like, you know, very technical but still individuals trading?
Sure. No, that's a really great question. And I think there's like, on the one hand, I would say that UMA is still kind of finding its product market fit. However, there is a very strong direction that we're going, which is like UMA is a protocol, and we want to build developer relationships, and we want to build, you know, business development relationships, and have people building on the protocol, and they handle the interfaces and the customers and even the product market fit. So that's kind of what we're seeing with Perlin. There's a number of other projects that have reached out to us to build kind of different products specifically for a niche that they're targeting.
Are you able to share about any of these niches?
There's one in particular that wanted me to remain quiet. There was trying to think of what the other one was. Okay, so Potion, for example, was building an options service that allows you to insure your Bitcoin, or insure your insure your assets by sort of like what they call it is like mixing a potion. You mix a potion to like protect your assets over a certain period of time, for example. And what's cool about that is it takes options, and it makes it pretty easy to understand, because you can just look at it and say, oh, I want to make sure that I don't lose value in my ETH over the next 30 days, you know? So you could just sort of whip that up, and it's just like it's a very well packaged product, I think, in that regard, because you don't need to really wrap your head around options too much. So that's like kind of one example of how they've taken it and made it like a little more dumbed down. But could you really call that retail? Like, I guess it's like crypto trader retail, but it's not like mom and pop retail. So at the end of the day, it's like, you know, who exactly is buying certain types of assets? And, you know, obviously crypto assets are like the easiest to kind of go after right now. I do hope that we start like widening outside of that. The other one that's working with us a lot is Jarvis, and they're working on like fiat currency pairs to provide access there. So yeah, I do hope that it goes more in that direction in the long run. Just personally, yeah, it sort of kind of depends on, you know, as we continue to build relationships, it sort of depends on like what people are interested in building. To be honest, we're going to be doing a hackathon with East Global here next month. So hopefully we see some cool like just some new thoughts, new ideas come out of there. You know, I'm definitely excited for something that might surprise me. Would be cool.
That's awesome. Yeah, I mean, it seems like, you know, you guys have put so much work into building a very, you know, a novel and great toolkit, and like, you know, a framework as well as infrastructure for, you know, for now, as you mentioned, essentially, you know, developers to sort of kind of find their sort of like, you know, great use cases for it.
Yeah.
I wanted to touch like another side. So so I guess one of the sort of like differences with the UMA assets today is that they all have maturity. Has this also been something that's like a kind of like a hurdle for adoption, or is there? Do you guys have a vision to sort of like to get to, you know, to I guess get around that, or?
Sure. Yeah, absolutely. So what you're referring to is the fact that every synthetic expires, right? You're talking about the expiry thing. Yeah.
Yes.
So yeah, so like just for context, currently like when we did the comp token, for example, that lasted, it might have been 3 weeks or 5 weeks, I forget exactly. But the way that these synthetic assets even work is they need to expire at the price of the underlying asset in order to like ever be sort of trustworthy as being worth that underlying asset. The way around that is to build a perpetual synthetic asset, and that involves a bit of like legwork. Hart and Balancer, I forget the other fellow's name at Balancer, but they did a presentation about how you could actually do this through Balancer, where you would have these pools of like a token that expires at the end of this month and one that expires at the end of next month. And it slowly rebalances from the older one to the newer one. And the experience for the user is just a perpetual synthetic asset. This rebalancing is happening in the background. So that's just like one quick example of how you might do that. We are currently working hard on a perp mechanism because it's critical. I mean, it's like, you know, we can sort of do this liquidity mining like we are with these expiring tokens, et cetera. But to get, you know, to get real users in the long run traction, like I think expiring tokens have a pretty limited, you know, like nutritional value. That's not what I mean to say, but you know what I mean. People aren't really into that.
Sure.
You can't set
well,
it.
I mean, you have to start somewhere as well, right? Because I think like on the other, I think like on the it's and you know I guess it's the approach of like keep shipping, right? Because the other there's like too many examples of I think especially like in crypto where you know projects have started off on these incredibly ambitious goals to build the you know this absolutely game-changing thing, and then you know the goalpost keeps moving further and further, and it just sort of so instead like you know this sort of like staggered approach tends to just have such a better result. Coming back to like you guys are still it's an Ethereum based protocol. It is a priceless oracle as you mentioned. So and I know that you've sort of by design, UMA has been built to kind of minimize on-chain actions. But is the current sort of you know the growing issue in Ethereum around just gas prices and the congestions that happen every now and then? Does this impact UMA as well?
Sure, it absolutely does. Sorry if you guys are picking up on that background noise there. It absolutely impacts UMA in a couple ways. So like there's just the people that want to mint the tokens, for example, but then there's also governance. So the governance issue, it has been like quite loud in the community. So when you vote, you get rewards for voting, but if you're a small token holder, your rewards are not good enough to outweigh the cost of voting. And so what you create is kind of people are sort of upset. There's people who are active in the community who can't actually participate in governance profitably. Like they have to do it charitably, which is not really an optimal setup, right? So actually just yesterday, I think it was, I announced the gas rebate program that we're doing, and the way that's going to work for governance specifically is anyone who participates in a vote, whether they vote sort of correctly or incorrectly, they will receive UMA tokens equal to the amount of gas ETH that they spent. So it would sort of be equivalent to buying UMA at that moment with your gas fees. So that's one sort of thing we're doing right now, just to kind of soothe that. And I actually think it's a really good program because it's consistent with our token distribution plan. I think it rewards the right people that are interested in participating. I think it's wins all around. The other piece of it is just like in the long run, like for instance, something I would love to see built at the hackathon would be something where people are incentivized to create like a layer 2 EMP contract that could, sorry, EMP refers to these synthetic expiring tokens, right? So if you could create a layer 2 one of those that would actually settle onto the layer 1 when it's needed, but you could actually do all of the minting and the trading on layer 2, there would be a way to do that. So there's probably some layer 2 ways to solve this. So that's actually something we're hoping like someone might take a stab at the upcoming hackathon.
Right. And yeah, I mean, I guess it's a problem for basically anyone building on Ethereum, right? But UMA, and this might be a dumb question, but UMA is in that sense, it's not really applicable in a cross-chain manner, or it's today the assets are Ethereum focused and sort of only Ethereum, right? I mean, I guess if you leave Ren BTC out.
Sure. So like the answer is yes, and then of course UMA could point its price ID at any asset outside of Ethereum as well. But as far as like, if you want to gain access to those synthetic assets, it's only on Ethereum presently. Yeah.
Okay, got it.
And one other thing I forgot to mention about the gas fees actually is somebody somebody just wrote a governance proposal to create synthetic gas tokens, basically some way to hedge or to speculate on gas prices, right? So that's something that's kind of in the pipeline actually as well. So that's not how we're addressing gas prices exactly. It's just a way to you know, hedge basically if you wanted to do so, or speculate on gas prices.
I mean, that would be, I mean, if it is, you know, feasible or like possible to launch essentially sort of, you know, because they have a maturity as well, right? So like essentially like fixed maturity, you know, gas futures, then that would be a very interesting product. Because I think like there are some examples in Ethereum, but definitely the adoption of like G tokens and so on could be more.
Yeah, and they work
another thing.
differently.
So you guys have also, you've put a lot of effort into sort of into building out your community and sort of and as well as, you know, kind of getting people to learn the ropes of this sort of like building out the governance and so on. Like what are the main like learning points been from that?
Sure. It's been an amazing journey, honestly. Like when I joined UMA, I launched, we were on Slack previously and I moved it over to Discord. And in the beginning, like there was just these really loyal people who were very interested, like just asking all these questions about how it works, you know, how the different kind of like threats that they perceived or how things could go wrong. So just like it was really great nerdy conversations. And that was kind of like phase one. And what was really cool is, so we launched liquidity mining and we had somewhat predictably a big rush of people coming in. We also saw like UMA's token get used on Sushi Swap. And so like the token price started going up because of that. And we had a lot of people coming in and asking questions. And what was really cool about the whole experience is those people that formed our core community right in the beginning, they like stuck around and answered people's questions. And they've sort of formed this almost like academic little institution around UMA and how it works. So I'm like supremely grateful for those people doing that. And then we just see people showing up, they're just interested. You know, people are just interested in how it works. It's a fascinating design. No one else is doing this priceless Oracle design. Yeah, people just like it. You know, I think they see the potential in it. And then also like everyone on my team, like everyone on the team is just like really bright. Like it seems like they've been really selected for that particular trait. So like most of these things are really thought through quite well, and that people like to have conversations about them. It's just really cool. Like I'm really, really honored to be on this team for that reason. It's just people that really like to think hard about how these problems can be solved.
That's great. And I also know that you you do actually you're involved, or do you actually or you run another DeFi community as well on Facebook. Do you mind sharing a little bit more about DeFi Nation, which I'm also a proud member of?
Nice. Yeah, DeFi Nation started must have been over a year ago by now, and that's been a cool journey because like in the beginning I was doing these demo videos like how to put your DAI on DYDX and earn 13% APY, which was like groundbreakingly high and exciting and cool, right? And so it started out there, and we had this like very nerdy community who would talk about like how can you tokenize a real world asset, and then we talked about like, well, do you need a legal entity to enforce a contract? How do you make ownership clear, etc. So we had these really like underlying philosophical conversations and political conversations about how you could actually sort of bring decentralized finance, you know, most of the things that finance do, and startup fundraising and permissionless lending, some really great conversations. And then, you know, of course, the group now has just been exploding because of the popularity of DeFi. We're seeing a lot of change. And so it's something that I'm like conscious of, the changing tone in the group. Because like, yeah, people are talking about farming these somewhat, you know, vegetable themed assets, for example. And so it's like, it's changed a little bit. I embrace it. I think it's all interesting, you know, just as someone running the group, I just try to be judicious around like just making sure that nobody's like scamming other people. Basically, that's really the main thing. But yeah, it's changed a lot. It's been interesting to watch since DeFi has kind of come into the crypto spotlight a lot more.
And what is your kind of I guess like just zooming out? What is your sort of like general opinion of this direction? I guess what you've seen as that what you mentioned, the sort of change in maybe not sentiment, but sort of the mood and the focus of the group as well, and of the market and where the industry is going.
Sure. I just think it's really interesting, man. Like watching the incentives behind like Sushi Swap, and not so much the specific thing around Uniswap, but like just the incentives. And then like Pickle Finance, for example, which I'm the full disclosure, I'm a Pickle holder at the moment. Like just watching the incentives around that, and then people analyzing the risk, and basically understanding that what that is a new way to distribute equity, and also bootstrap liquidity, and also just like gamify everything. Like it's just mind-blowingly interesting. And like, yeah, it's a bit degenerate and it's a bit like risky. And it's also one of these things where, you know, your friend talks about how they made X number of dollars doing this. So you just sort of jump in blindly. And maybe it's your first time installing MetaMask, and like, you know, it's like, there's so many steps you have to take before you get from there to like understanding exactly what you're doing. So like, it's risky, but it's exciting. It's not like I started out wanting to like bank the unbanked, or to put, you know, digital currency into the hands of people that were suffering under bad governments with really high inflation rates, for example. Like, so that's where I started out in DeFi, and I still hold that vision. That's not kind of what the narrative is at the moment. And like the term DeFi has turned into a new word. It's not really short for decentralized finance anymore. It's just its own thing. Describe, you know, to describe all of this stuff.
Some sayings of, you know, DeFi, definance yourself.
Yeah. So I'm along for the ride. It's been interesting. You know, it's fascinating. I also trust that like once the excitement dies out, then we'll go back to work. You know, I mean, I'm staying to work either way. It's just like the conversations. I love the bear market conversations. I love to go to bear market conferences. It's where the nerdy people are. They want to talk about the interesting things. It's all good. We're gonna have some cool learnings from this market for sure. And the
100%. Well, I mean, hopefully the music hasn't stopped yet, right?
Oh no, yeah, but definitely not.
But in your opinion, like, I mean, we discussed this sort of like the gas price sort of drama, or you know, the problems that it poses, and obviously there's more and more sort of it does create an opportunity for new like competing change, as well as there's you know, a number of level 2 solutions that are that have come out, each with their kind of pluses and minuses. Today, I'd say virtually 99% of DeFi is on Ethereum. If you had to kind of guess, what would that percentage be a year from now?
Very interesting question. So what percentage of DeFi would not be on Ethereum a year from now? I guess what comes to mind is probably like 80% still on Ethereum, but I think that there will be some interesting things happening. And I've sort of seen people trying to edge into it a little bit. Yeah. Gosh, though, it's pretty hard to bootstrap that stuff. I don't know. I'm saying 80%, but I would actually lean even towards higher, that ETH will maintain its position. Yeah.
Good answer. I mean, I think I agree with you. Like, you know, they're most likely, obviously, we'll knock on wood, there will be, you know, tremendous growth. The question is sort of like, you know, which side does grow faster, and given the sort of, you know, uncertainty or some issues around sort of like the scalability of ETH, I guess it's just, you know, it does leave a sort of a base uncovered.
Sure.
I know you're sort of you're super busy, and this has been a very insightful conversation. Just a couple of sort of so just before I let you go, just a couple sort of quick questions, and just to know, what does UMA need help with the most from its community and so on today?
Sure, that's a great question. Thank you for asking that. So, like, I really want more developers, people that want to build on UMA, want to understand the protocol, and we're actually working on a certain ways to try to incentivize developers right now. And we're doing the hackathon. So that's probably like the most basic answer. Another thing that there's actually opportunity right now is through liquidation. We're providing like several $1,000s a week of basically just these fat liquidations that we're plopping right on the chain, and people can liquidate them and take the profit. So like we're basically intentionally creating under collateralized positions, and when you do that, you get to take all of the collateral. And so that's the other thing, is like we want a healthy bot network watching over and making sure to protect these positions. So yeah, I would just say developers and bots would be the kind of the main thing. The other thing would just be like serious business development partners, people that are interested in building something that has like an end user in mind. Like maybe they have customers or they have an end user in mind, and they want help offering the financial product and infrastructure underneath it. Those would be the kind of people that we're looking for.
Awesome. I mean,
yeah.
Based on where, you know, the pace and intensity that the industry is moving, I'm sure you guys will get where you're hoping for.
Yeah, and let me add one more thing there, which is just like personally, I'm looking for more people that are excited to communicate these ideas to other people. So that means like I'm actually looking for more support in the community and in the messaging and the education around it. So like if somebody here is watching, like feels inclined towards that, just like reach out to me, because I'm definitely looking for excited people, bright people who want to support, who want to be part of it, basically.
Awesome. Two kind of quick rapid fire, I guess, questions that we're doing at the end of for a compilation at the end. Do you think ETH 2.0 staking will come out this year? Yes or no?
This calendar year, no.
If you had to describe DeFi in one word.
Nascent.
Good answer. Actually, everyone has a very different answer to this one.
Yeah.
Some say freedom, some say apolitical, and a lot of options. Which is great.
Yeah.
Like, you know, that the same thing can mean so many different things to people that are so passionate about it. Anyways, thank you so much, Clayton, for your time. This has been a very interesting conversation about UMA. And what would your suggestion be to someone who wants to learn more about UMA? Where can they get started?
Well, hopping in the Discord is always a great place to start. There's a resources channel in there. That's also a good place to start. But just come have a chat. You know, it's a friendly community. Happy to answer questions and just hang out.
Awesome. Thank you so much once again, Clayton, for your time.
Thanks, Artur. It was a pleasure. Take care.